Hello. Very welcome to this fourth event of Top 100 panel discussion, which will follow very shortly after we have some opening remarks. It's my pleasure to moderate already third panel discussion in a row in this lovely building. We have organizers SSE Riga, Prudentia and also Nasdaq Baltic willing to say a couple of words as introduction to the discussion we will have. As relevant data is missing, still I hope that today through some discussions we get at least some feeling what Baltic SMEs are, whether they are strong and how are they in terms of profitability, ambition, innovation, and whether that's success to further economic growth in the Baltics. So without further delay, Kata Frameholm, representing SSE Riga, Associate Professor here, and also your title is over there, so the floor is yours.
Thank you. I don't have a microphone.
Oh, here.
Now I have a microphone, so I'm sure you can hear me. Lovely to see all of you here, and a very warm welcome to SSE Riga. We are grateful for this collaboration, which is happening for the fourth time. And I think this is a unique opportunity at the beginning of the year, every year to check in what's happening in this part of Europe. And I was very delighted to see the title, because if we look back at 2024, not much happened, but one of the things that happened is that Europe realized that innovation and SMEs are really something that we need, and this is something that we need to develop in order to stay competitive. So I very much hope that today's discussion will give us more insight to that. I know that Morten will try to do his very best to give us some macro insight as well. I'm looking forward to that. So again, without further ado, thank you so much for being here today. I hope this is going to be a great discussion, and a warm welcome.
Yeah, thank you, Kata. And now a couple of words from Karlis, Managing Partner of Prudentia Latvia.
Arvids, thank you. Labdien. Hello to everyone here in this wonderful Soros forum. Thank you, SSE, for cooperation and activity that we are having in long time with you. Thank you to Nasdaq for cooperation. Yes, as previous speaker said, the SMEs are really important, everyone knows, but of course we have to talk more about it and come more to practical and theoretical issues related to this. We are having this top 101. 19 years already we are doing this together with Nasdaq. So this year will be year 20, so some celebration later in autumn. But from 101 companies in the top, there are 14 companies which are in SME sector. So this European, let's say, standardization up to 50 million euro sales and up to 250 FTEs or full-time employees. So I hope that in next top this year, in next years, we will see more and more SME companies coming, let's say, up, so growing. So this is question of ambitions, of competition, of broader look. So, and I hope that after today's discussion, we will have more and more interesting companies, not only in top, but overall in Latvia and other Baltic countries. Thank you.
Yeah, good afternoon. Very welcome to this discussion. It's clear that SMEs are heart of our economy, and they drive the innovation and create new jobs and contribute to the society in general. Today we have gathered to discuss those challenges these companies are facing, but I want to point out the Nasdaq role in all this game. So we have been supporting the growth companies very much during recent years. So we have growth market segment, which is developed specifically for such very ambitious, fast-growing and brave enough to be transparent, well governed, to reach out to investors for funding. Last year, we have been supporting such companies to attract almost 300 million euros in public offerings. It's both shares and bonds. We witnessed the largest IPO in country's history, Eleving Group, who attracted almost 30 million euros. We also supported Kalva Coffee IPO and their listing. On the top of that, we have supported the issuance and listing of 36 different new bond issues on our market with a total value of above 700 million euros. And success of our companies among the top 101 most valuable Latvian companies should be also noted. The number of companies included in the top 101 is on the rise. So last year, there were 12 companies in the list who are also using the stock market, capital market services. So we are looking forward to 2025 to welcome even more new and ambitious medium-sized companies who are brave enough to step into the capital markets. And as a leading manager of companies, serving the companies on Nasdaq Baltic market, I have to say that each Baltic country have its different strengths and different weaknesses, but we all have one common goal: to support and develop SMEs. This event is an opportunity to discuss these challenges, so I'm looking forward to interesting discussion, and welcome.
Yeah, thank you, Lena, for being a true enthusiast of capital markets, also bringing some optimism and some light as well in this. So we will proceed now with a panel. My name is Arvids Kostomarovs. I'm a visiting lecturer at SSE Riga, teaching business valuation to students, and also am head of a private debt fund in the making at SG Capital, aiming to provide alternative funding to primarily SMEs in the Baltics. I'd like to ask the panelists to come forward. Okay, so very welcome. Let me do a very brief introduction of our panelists. Morten Hansen, Head of Economics Department, Danish by citizen, but living in Latvia since 1993. Also has been a member of Fiscal Discipline Council for quite many years. We have with us Gatis Kokins, board member of OC Vision. We have Baiba Onkele, CFO of Storent Groups, I understand since foundation in 2008. And we have Jurijs Adamovičs, founder and chairman of Alūksne Poultry Farm, APF, and also council chairman of Industry Bank. So, to set the scene, let's define SMEs so that we understand how many of those we have. So by defining SMEs as companies with turnover, with sales below 50 million and employees less than 250, if we look at Latvian entities, then we have only about 250 or a bit less companies of the size bigger than these SMEs. in top 100 of most valuable companies, we have 14 of these companies that have turnover less than 50 million. So 14% or so, good start. I have some recent data on the mood of SMEs in the Baltics. One of them was obtained by Luminor last year in November, surveying about 750 Baltic SMEs with less than 250 employees. And Latvian SMEs were actually very optimistic about their growth. 39% were confident revenue will grow. 26% believe it's stable, and only 9% were really pessimistic about prospects. And interestingly enough, about 37% of these SMEs surveyed intend to expand business this year, and and primarily by extending service offering and sales volume. And it's especially the companies with less than 10 employees that showed the biggest optimism. Lithuanian SMEs showed quite a similar sentiment, while Estonians were rather pessimistic in comparison. And this survey highlighted that lack of funding options is one of the reasons why SMEs do not expand their operations. If we look at data that Finance Latvia Association has compiled, they looked at 120,000 annual reports that have been filed by Latvian companies. So although the number of companies is bigger, but 112,000 really submit reports. 92% of these had revenues less than 1 million in 2022. At the same time, top 600, which is roughly very close in proximity of revenues, about 20 million, account for 53% of total sales revenue of all Latvian companies. Turning a bit to financing aspects, which we will discuss today, association believes that only, which is primarily banks are members, that only 21,600 companies are meeting typical financing criteria of the bank. So it's about one-fifth. And of these 21,000 plus companies, only 4,500 have been actually issued loans. Another 5,500 loans have been issued to those companies that do not really fully meet these financing criteria, and the size of these loans also has been relatively small. On a positive note, currently we have loan portfolios of banks increasing, so there was a 4.5% increase in September year on year. At the same time, if we look at demand for bank loans, so in Latvia only 1/3 of companies have shown interest, while in the Eurozone it's more than half of companies. So demand seems to be less, and when those companies that say they are not interested in the bank loan, they were asked why not? Then 2/3 say they just don't need those loans, and 1/3 of those not applying for loans were not happy with pricing, collateral requirements, bureaucracy, or overall unavailability of loans. So, as SMEs by numbers are very large part of the economy, so one might think that economic growth to some extent is very dependent on these. So we'll try to explore, with the help of panelists, whether that is the case, and is there anything holding back SMEs? Funding is mentioned as a tricky, and we have very, very low loans to GDP ratio. So I will start with some easy questions, and then, dear audience, please save all the tough, difficult to answer questions to the end. We'll wrap up discussion, and you will have an opportunity to ask your questions. Okay? Good. So, Morten, let me start with the macroeconomic landscape. And as an economist, what is your take on SMEs in the Baltics? Do they play an important role in employment, in economic growth and welfare of our nations?
Yeah, and thank you for this. And easy questions first. Thanks a lot. I'm not really an SME person, right? First time I heard about SMEs, it was from the so-called Agenda 2000, when they started paving the way for the Copenhagen criteria of how to get into the European Union. And the idea there was we should have many, whatever that means, SMEs, because it's good for competition. So I tried to look at some numbers, and I will present a little bit of numbers, and then you will see that they are not misleading, but they're not really leading anywhere, right? So I could look at a number of SMEs in our 3 Baltic countries. Obviously, there are most of them in Lithuania, the biggest country. So if I adjust for size of population, then we also have that Lithuania will have most. So the following numbers that I will give means how many SMEs per 1,000 inhabitants. So there, Lithuania is 105, Estonia is 93, and Latvia is 60. Then I think at first we look at it and say, something wrong with Latvia, because that's what we often say, right? But then I started looking at other countries. Poland, 63, so it's the same as Latvia. I looked at Sweden, 71, so just a little bit more than Latvia. I looked at my own country, or my country of passport, Denmark, that's 44. But what you're sort of starting to get from this here is that it doesn't seem to be related to what I often do, GDP per capita, right? So having many or having few SMEs, there's no doubt that it's very, very important in the economy. And you mentioned it yourself by saying that almost all are SMEs in this country, right? So it's obviously very important. But the extent or the way by which it's important is perhaps not so very obvious. Just a little bit at the end here for me, at the beginning, in numbers. Country that I could see would have fewest SMEs per 1,000 inhabitants, that's Germany. And I think we're not so surprised because of all these big industries that they have. But the country that I could find that had the most was the Czech Republic, with 111, so a little bit more than Lithuania, and I'm unable to explain that also. So thank you for this in sort of introductory remarks, the opportunity that I have to give some information that we didn't get much wiser from. So we move on from here, I think.
Okay, so we established that so there might be some differences across Baltics.
Absolutely, yeah. There are differences, but what does it mean? That's less. Yeah, it's less difficult to draw a conclusion from, at least so far. So I'm looking forward to get the conclusion from my co-panelists.
Okay, and sort of if Lithuanian and Estonian GDP statistics are by economists believed to be relatively well forecast, being able to forecast them, then Latvian numbers over the last few years seem to be sort of jumping around and very little clarity what's actually is happening. And so to me it seems that GDP forecast for Latvia, that growth that is sort of foreseen, is all the time postponed. And now it's now 2.63% is forecasted for this year and next year. So do you think Latvian SMEs are the ones that struggle because we have them in so big amount, and or is there something else happening in economy?
No, there I think it's pretty clear that it's really got nothing much to do with those. There's so many of those companies. Some of them will be struggling, of course. Some of them will having a good time. You mentioned it yourself with your numbers that many firms, they are very optimistic. The Latvian economy at the moment, I think I would even put it like this and say we should be fairly happy about how it's doing. It's not growing very much, not at all. But given the external environment, that's absolutely not strange. We have the war not very far away from us. And then quite frankly, with this super open economy that we have in Latvia, it's not very strange that we're struggling because we have a recession in big trading partner as Estonia, big trading partner as Sweden. Germany is looking poor. So I would even go so far as to say that small growth this year, whatever it exactly is going to be like, is still quite good given the external environment. It's the external environment there's something wrong with. It's not the SMEs. Some individual ones will be struggling because of lack of export opportunities, perhaps. Others will be thriving. So there's no clear picture there, and that's perfectly fine.
Yeah. Let me ask you one more question, Morten. So this 2.5-3% now overcoming 2 years, do you think this region has capacity to grow higher than that, considering geopolitics, demographic situation, and maybe any other aspects?
I think it does, but I'm not going to give away all my smart points here right away, right? I want to keep some of it for later. But I have one suggestion there coming up a little bit later. But let's be honest also, demographic issues are kicking in, and I think all of us in all three countries should be looking at that the unemployment rate is super, super low. So it's very difficult to get further labor resources to come out of it. So there's nothing to exhaust there. Has been exhausted, all of it. So we have to go elsewhere. But as I said, I keep that for, a little bit later if you don't mind.
Okay. Thanks. So having this view sort of from the top, the big picture, let's turn to entrepreneurial ambitions, growth and expansion, building on some successful and ambitious members of the panel we have today. So, Gatis, let me start with you. So, OC Vision sales in 2023 reached 33 million, achieving a 12% growth over the year. And then, if you look in comparison to 2020, it's 54% growth, an impressive growth. And so, in one of interviews, you said that you have been one of a few enterprises that showed the growth despite stagnating economy. So how was the last year and what are your ambitions going forward?
Right, so OC Vision is representing optical retail. You probably have heard Visionet, Vision Express, Optio, Dr. Lanzer. So we are doing optical retail mainly. There are a few other directions, but that's our business. And obviously, when you see this turmoil around and kind of economic issues, you always analyze how that will apply to your branch or your business. And somehow we've been lucky and probably also smart enough to benefit from the situation because, again, when you are talking about household spending, if there is high inflation or recession, you probably would stop spending in fields of I don't know, tourism, for instance. But you will still buy your glasses, and that we understood, and we saw that actually spending in our industry has increased actually during those times. Then obviously you mentioned also demographic issues. For retailer, there is nothing worse than declining number of population.
But if we live longer, how is it on eyewear?
But in our business, actually, for young people, it's about 20% who need glasses. Mm-hmm. For elder people, like 100%. So population gets older, and we have more clients than probably demographic shows. The same is what we call myopia epidemic. So people more and more use small devices, and even youngsters need glasses. So therefore, when you see those poor macroeconomic figures, it's not always applicable to your particular industry. And last year for us was also very good. We had double-digit growth. We had decent EBITDA margin. So hopefully this year will not be less successful.
But you have also expanded and went to other markets. So this is an industry which has relatively low barriers. There's a lot of competition. So what has been deciding factors for you to actually grow and go outside sort of home market?
First of all, you must be competitive. And due to early policy of our government, the country was very open and very exposed to international business. In our field, we founded our company in '92. Vision Express founded their subsidiary in '91. So we grow together with Vision Express, and in like 7 years, we managed to outcompete them in terms of sales. And that was a point when we went to Paris and said, guys, we would like to buy your subsidiary because it's unprofitable and we are doing better. And they sold us. And we got Vision Express business in Latvia, and we also got in Lithuania. So that was a way to Lithuania. Then we did some other acquisitions. For instance, Maxima or Vilnius Prekybos, they also had optical chain. And we said, guys, we probably do it better. So we bought from them their optical business. And by acquisition and organic growth, somehow we managed to succeed. Then we started online. We are good in Latvia and Lithuania with Dr. Lenzor, but somehow we also thought we might be competitive in Estonia, Finland, and the rest of Europe. So we started sell globally or mainly in Europe. Again, it gave additional positive feeling that we are competitive. If you are competitive, I think there are no barriers and no frontiers.
And what would you say are the sort of the biggest difficulties you faced, or maybe some positive surprises from going beyond Latvia?
It's hard to say. Obviously, there are differences in legislation. You said that the barriers in our industry are not high, but they are, actually, because optometry is licensed business. And then you have to comply to various different requirements. And obviously, in Lithuania, it's slightly different than in Latvia. But at the same time, we realize that in many cases, especially in marketing, so you say, oh no, Lithuanians are different people. They don't like blue color, they like green color, etc. No, it's not. It is not. So consumers, clients are very similar, and if you manage to work in one country, you can easily transfer that knowledge to the neighboring country at least.
So these are some encouraging words for maybe some who are listening to us. And you have also expressed the view that GDP of Latvia growth can be achieved only if our companies go this route and go and expand and grow beyond their sort of home market. Do you believe it's in our genes to do that?
I think we did it back in 17th, 19th century, so why not in 21? During the 20th century, there was a strange idea that somehow we can generate increasing wealth inside, but that was all related to our big neighbor. And as we see, it turns out to be very toxic. So that path is not available. And then I would say no choice.
Okay. Baiba, let me turn to you. You can switch on that microphone.
Yes, do you hear me?
Yeah,
Well.
good. So, Storent in 2023 reached turnover of more than 43 million, EBIT 13.7 million, and you have publicly shared that you are keen to look at targets, acquisition targets abroad. Do you see this international expansion as a way forward for you to grow?
So Storent is equipment rental company, and right now we are in 5 countries already. And we mainly serve construction industry, but also other like production, entertainment, military also lately. So if we are talking about organic growth, then there is no need to go outside. But if we want to grow faster and bigger, then definitely M&A is one of the way how to grow. And we have already two acquisitions in our history, 2017. So we have that experience, and we find that way quite attractive. It's not easy way, but definitely we want to go that path.
So challenging and promising.
Exactly.
Yeah. Okay. So Jurijs, let me also you so you don't wait all the time. So APF achieved sales of 13.3 million and 19% growth in 2023, a net profit of 500,000 or so. How was the last year, and what are your current plans and ambitions?
Yeah, well, last year in terms of revenue and EBITDA will be on a similar scale, but we expect a very significant boost this year. The business model that we have, mainly because of the specifics of the industry, and we are producing egg and egg products, so pretty much animal-based protein. We export up to 60% of what we produce. This proportion is likely to remain the same because for us the home market is Baltic market, so we don't distinguish pretty much between Estonia, Latvia and Lithuania because we work with pretty much every large international chain present in our region. This year we plan to complete the investment phase, which we announced during the subscription process for our IPO. So that's very well on track and expected to be completed in May this year. And that will provide a very significant, hopefully up to 50-60% boost in revenue year-on-year basis. Actually, last year was also quite transformative for APF Group. We have stepped into uncharted waters. We have launched a new business line. We launched a new trademark, Fitech Squared, which is active in the health and sports nutrition. We have started e-commerce platform and we sell our branded products, which are all egg protein based, like protein powder, egg protein bars, egg membrane collagen. And we expect actually to grow this business line quite aggressively, adding new products this year and rolling out in other geographies as well. And this is a business with very significant potential, and our team believes we can achieve a lot here. Similarly to the colleagues on the panel, we're looking at M&A. Without any success so far, we actually made a bid for a pretty large operator in old Europe. I'm not entitled to give names, but we ended up being second, so our bid was not accepted. But similar to my colleagues, I do believe that M&A is the path to go, especially in our industry, which is, in my specific industry, Latvia produces much more than we consume. In fact, actually, interesting fact, some of the people in the audience might not know. Actually, Latvia is number 1 in European Union in terms of number of hens per capita. So we have more chicks than any other European nation. That means that we have to work very hard on export and international sales because logically we cannot sell everything domestically, you know, which sort of already frames my team and the APF team into, you know, thinking internationally.
So people are thinking about some ideas for saying about the country. So that might be one of the ideas as well. So how to present the country.
Exactly.
Yeah. Then so I heard export plus maybe acquisition ambitions. So there is no lack of ambitions of entrepreneurs being here. But with your hat of the banker, would you say there are industries in the SME sector that are more likely to have a chance to go and grow internationally, or it's difficult to differentiate by
I would put
industry?
it differently. Yeah, I would put it differently. I would actually say that, you know, confidence follows numbers. But yet you have to be realistic. Obviously, you know, the chances of Latvian companies to succeed in oil and gas exploration are none, right? Because we never, you know, operated in those industries. But if you look at, you know, light manufacturing, food, agri, services, forestry, you know, these are the industries where traditionally Latvians have been strong. But I would not try to generalize here. I do believe that, you know, it all nails down to the ambition of the founder, capabilities of the management team. If you have a good product, a very clear strategy, you have execution capabilities in place, you have equity and funding available, you know, sky's the limit.
Okay, thank you. So Gatis, you mentioned that at one point in time you went and approached competitors to grow in this way your business. Can you recall what was the stage of development of the company when you felt, okay, now we can grow maybe in a different way or quicker? We are sort of internally ready for next challenge.
It's all linked to financing actually, because to generate cash enough to start a series of acquisitions, it's not always possible. But at the same time, for small and medium enterprises, there is quite a good opportunity to raise debt and equity in the country. Actually, funny thing that when I graduated at Stockholm School of Economics, my thesis was financing of small medium enterprises, and we discussed possibilities even to take credit cards in all commercial banks personally and finance. Obviously, we discussed this friends, fools, and family approach. But obviously, if you have grown your business to few millions of revenue, and you have a clear management information system, good accounting, transparent tax position, you have good budgets, then you can go to the bank. And actually for OC Vision, first financing partner was a bank. And then even we did some tender among those banks who would finance us, and we changed those banks few times. But then as transactions become more complex, we actually turned to mezzanine funds. And back in 2016, we did the management buyout because we had like 13 founders, and now we have like 4 shareholders. So we bought out a majority of founders with use of mezzanine capital. And then we swiftly use opportunity when COVID came with autumn financing. And today we are looking probably for the bond market. So we will test all available financing opportunities in the market, but it looks feasible. Why not?
Okay, thanks. We'll look into the financing aspects a little bit later on, but maybe Baiba, any similarities to the approach? And I understand you made this acquisition in 2017?
Yeah, so we did in 2017, but maybe I will go a little bit back when the company was established. So actually two co-founders and also myself, we worked for another international rental company. An idea to make a new rental company in Latvia already in the beginning with wider range of markets, not only in Latvia. Actually, it came when we had international experience, when we saw how the Finnish owners are doing the business, and at one point of time we understood, okay, we are not worse than them, so we can do actually more. So that's why in the very beginning we started in 2008 when the financial crisis actually hit the Baltic countries, and already in the beginning we decided, okay, we will be at least in 3 Baltic countries, so we are like sisters, brothers, okay, with some cultural differences, but still the business environment is quite similar. And it was really a success story to grow very fast in the beginning. And then with the help of majority owner, the investment fund, we did acquisition in Finland in 2017. So that was the two elements, this courage and willingness to grow, and of course the funding available. And another acquisition we did actually in Latvia, and that was because another competitors from Nordic countries was going for sale, and they just wanted to sell a non-profitable entity here in Latvia. So we were very lucky to buy a top 3 player in Latvia. So it's like combination of knowledge, ambitious, and being the right time in the right place and having funds.
So it sounds like it's not like, okay, now we are ready and now let's look for opportunities, but rather, okay, it seems like a good opportunity, why not?
That time, yes, but right now we are looking for M&As 2 years already in a row, and to be honest, we have to compete with other companies who are looking for M&A, and if we look now more to Nordic side, then let's be honest, nobody is telling, let's come from Latvia and buy us. So we have to prove ourselves very hard.
Right.
So that's our reality.
Okay, right. Okay, turning it to a little bit different aspect. So Latvian government has taken some steps to support growth of SMEs. There are some state support programs, Altum loan guarantee program, probably the most people know about, some other instruments, recently some minor but still VAT law changes aimed to make life easier for very small companies to start sales in EU. It's a question to all of you. Is there something that the state in the Baltics could do and should do more to help SMEs? Is that necessary at all? Or SMEs just need to survive in these circumstances as they are? Yeah, anyone?
Yeah, I can start. Well, I guess there are 2 things you can look at this. One is describe things as they are and complain, or compare yourself to other countries. But judging from my most recent experience, and we have investment projects that are developing in Alūksne, in Preļi. In a nutshell, in all fairness, I don't think we can say that the legislative framework, the way courts operate, the way the tax system is, the way is it predictable or not, can really be perceived as rolling out the red carpet for entrepreneurs and SMEs. It's not. And just to give you one practical example, in our Alūksne site, it took us 3 years to complete environmental impact assessment procedure. Another facility in Preļi, 3.5 years, we're not there yet. So the buildings are ready, but we cannot start production. So just to illustrate, these are some specific matters, but still they are. In terms of the support programs, there are many, which is good news. I think the guarantees instrument that Altum does, these actually do work as a quite substantial boost for bank issuing more lending. I also see it from the bank where I'm chairman, at Industria Bank. actually quite a lot of lending we do to I would even say not even medium-sized companies, but to small, where the ticket is in the range of 500K to 2 million, which is our sweet spot. Actually, that guarantee instrument from Altum in many instances is a decisive factor for us to take on the risk and support that aspiring entrepreneur and grant the loan. So there are a number of instruments, other instruments that also exist. Whether they are administered, operated, and offered in the most effective way, I would say it depends, varies on the particular land ministry and agency in charge of it. Again, it all boils down to people in charge of the specific agency. Can they do better? Yes, they can. Is there a dialogue? I think there is. Do they listen to us? Sometimes they do.
So anything to add? Was they just listen or do something about it, or?
I think in general everything from government side sounds good, but I think the devil is in the details. When you have to come to some technicalities and some documentation, then you understand that there is this problem, this challenge, and this. So in our company, actually, we rely on ourselves. We are aware of the Altum different kind of financing guarantee, and also for digitalization, there are financing options, but to be honest, our industry is so capital intense, so it doesn't help us to get a guarantee for 1 or 2 million. So our debt is 50 million. So it's really so time consuming to go through this process that we say, okay, we go on the Nasdaq and raise the bonds to finance our business. That's much easier for us.
Okay. Yep.
So question was whether government could do something. And my answer is yes, especially when the crisis comes. COVID was an enormous crisis for retailers, for instance. And in that aspect, I would say that the government approach was close to the perfect. Because of funding possibilities, because of possibilities to restructure tax payments, I think most of players survived that disaster with minor damages. Then, when we are talking about the financing, again, if you turn to the capital markets, it's pretty cost-intensive process. And obviously, if you are issuing like 100 million in bonds, then the cost part is probably feasible. But when you are issuing like 8 or 10 million, like we are going to do, then obviously all those legal fees and all the preparation is rather expensive. And again, we have some state support for issuing bonds. Mm-hmm. Without such support, it would be quite hard for us to participate in capital market. It's again good case. Then we discussed a little bit that we are regulated business. So our optometrists work in medical institution. That means all our shops must be registered as medical institutions, which is not always possible according to the old legislation. So what we did, we actually started talking with Ministry of Health, whether we can change it to adapt reality that most of services are now happening in trade centers rather than in hospitals. And again, government find the possibility to adjust legislation in order to allow us to proceed with that. So I would say there are obviously issues, there are problems, but those who are painting Latvia as a failed state, I think got financing from other part of world. Thank you.
Okay, interesting point of view. Anything to add, Morten?
Yes, a little bit. I was thinking about when we had the first round, so when we were moving in that direction, and I was listening to you, I suddenly thought that, oh, we will have problems today, because there were no problems, right? Everything was success. And either you are representative of Latvia, which would be good because then there are no problems, or there is something elsewhere. But then we had the second round and there was a little bit of complaint. Very good. And now I will do something that you will not be happy about because I will also ask questions, yeah?
Okay.
Now, one
That's
of the
fine
big
with me.
issues for us in macroeconomics, right, that has been that, quite frankly, a lot of politicians been whining about that the banks are not willing to lend. But is it really an issue, right? I mean, what the politicians are looking at in our language here in Soros, right, is that they think there is lack of supply of money coming out of the banks. But I very much think about also, is there simply lack of demand? I mean, that you can finance elsewhere, or is it too complicated to go via the banks, or are there some problems there? It's something that we in macro would actually like to know a little bit more about. But since I'm not in an SME myself and I don't need any funding like that, I just don't know. But sorry for stealing
but
questions.
that's a good question. I think the audience is very interested in that. So let's hear what our panelists can say about that.
Somehow, as I said, we were able to get financing back in 2000 already. So my view is that if you are structured enough, if you have finances in order, able to budget and fulfill those budgets, banks are happy to finance. Obviously, you must be open to alternatives. As we are discussing capital markets and bond market, it's very important that there is alternative to bank financing. Otherwise, banks will become nasty. And today,
So you're saying they have not yet?
they are 50-50.
50-50, okay.
Because obviously we have not closed our bond issue, and we don't know the final kind of conditions. But it looks like that when you deal directly with the capital markets, you get slightly better terms and conditions than with the banks. So it's not always so. But there is room for improvement for banks as well.
So you would say even with this perceived competition, that's the outcome can be better.
Obviously.
Yeah, Jurijs?
Yeah, I feel obliged to respond here, wearing my bank's chairman's hat. Well, this, issue popped up on the agenda and on the public debate, I think 2 years ago. And I will try to structure my comments, probably making 3 points. Number one, when it actually all started and political debate started and some curious and interesting political proposals, were put on the table, we felt it our obligation to do a little analysis. So what our management team at Industrial Bank did, we basically took the annual reports of all of the banks, took their tier 1 capital out, and the size of the loan portfolio. And the picture there was quite curious. What you see is that all foreign-owned banks have a very significant capital reserve which they do not utilize. So they could issue billions and billions of more credit to the real sector than they actually do. On the flip side, you have a handful of locally owned banks. By locally owned, I mean 51% plus is owned by Latvian citizens. Most of those, ourselves included, we basically utilize up to 100% of tier 1 capital in the given year. Why? Well, because we're local. We believe in this country. We want our capital to be fully utilized. We know the business people in this country, and most importantly, we believe in this country. Now, is it fair, to accuse internationally or foreign-owned banks that they, do not offer sufficient credit? My personal opinion is not. Because what you need to do is, look at the balance sheets, annual reports of the same banks, because there are the same names operating in Estonia, Lithuania, Latvia. And, our political leaders should ask themselves a question. Why bank named X in Estonia, Lithuania issues much more credit to real sector than it does in Latvia? And I think, these are the questions that need to be answered. Again, from a banker's perspective, I do not see any lack of credits that, we would be willing and able to finance. On the contrary, actually, our pipeline is several times larger than we can actually allow ourselves to finance. So, as a shareholder of the bank, I'm quite happy because, we are looking very optimistically on year 25. We have huge pipeline and we'll finance those deals. So I guess, it's not a one-sided question. So the blame is actually, in my opinion, the blame is not in the court of the private sector and private loan banks.
Okay, I want also to add on this because we have quite big amount of the financing. So 40% comes from the banks in Latvia and also in Finland. So as our owner jokes that banks offer the financing for those entities who actually doesn't need any financing. So we have very challenging experiences with the banks. So in some more challenging times, they put us on the knees, and maybe that is one of the factors why we are very careful with the banks. But the financing is there; it's available. The question: how strong are you to negotiate, and what conditions do you agree with the bank? So, but of course, the performance of the companies sometimes I think is also lacking. So there is always this balance. If the company wants to grow, then actually it can't show the very stable results. So then the risk, how the banks see the risk. But of course, the Latvian capital-owned banks are more open compared to. I agree, totally agree.
They are still relatively small. Yeah. Gatis, you already sort of started about the funding options and your thoughts. So, so you use this Altum investment fund created during the COVID to manage the impact, and your loan matures in 2026. So you said you are thinking about going to the capital markets. You also mentioned that there is state support for those who are considering this. What are other maybe considerations for you to actually look at this alternative? Is this encouragement about the costs is something that pushes you to think about capital markets, or it's something else?
Like all entrepreneurs, I think we explore all the opportunities, and obviously banks are also ready to finance us again, to get us back from funds and capital market. At the same time, we feel that particularly to refinance that Altum fund, it would be wise to issue bonds, and we are about to. We have already signed with Signet contract. They will assist us, and we hope that during this year we will debut with that. But before making that decision, obviously we analyzed all the options, and this time we find that capital markets are more attractive.
Right. So. Just to put in perspective, when we talk about capital markets in the Baltics, they are extremely small, especially sad story currently in Latvia. So market capitalization in Latvia below 1% of GDP. Lithuania and Estonia better, 11-14% of GDP, and average in EU over 50%. So the Latvian finance minister about 2 years ago said, okay, we are aiming at 9% of GDP. Almost 2 years have passed. Nothing credible has been really been evident, so to say. Maybe it's done, but you don't see it. So it's still very, very small. So how important is this capital markets for these small and middle companies? Is it only for the bigger ones, or it's also an important opportunity to grow for smaller companies like yours? Yeah.
Yeah, if I may, maybe starting on the macro side of your question first. I think one doesn't work without the other. Obviously, it's much easier for private sector operators, for founders, shareholders to make a move than it is for a large state-owned corporation. But let's be realistic here. If only we will see, a handful of private issuers, mid-sized companies doing, 10, 20 million issues, we'll not see nor 2, not even 1.5% of GDP. Also bearing in mind that, sometimes companies do delist for various reasons, sometimes also for good reasons. So, if we really want the capital markets here to develop, we probably need to continue, there have been various stakeholders also present in these rooms who do fantastic work on, pushing this higher on the political agenda. But as you rightly said yourself, nothing specific, nothing concrete has been done. So our policymakers do not walk the talk, unfortunately. If I would allow myself to criticize a bit, we understand here that, for the Baltic capital market, for Latvian market, capital market to become anywhere on the radar of, international institutional money, it has to move from frontier market to emerging market. It has a set of criteria in terms of, the number of issuers, the capitalization of mid-sized issuers, capitalization of the large cap issuers. None of that can be achieved without large state-owned listings. And all this, flirting about, not listing Latvenergo, Latvian Forest Corporation, I personally don't buy it. I don't buy the arguments of not listing companies because they are of strategic interest. Yes, they are. But what prevents us from listing 10% of Latvenergo, 10% from Latvia's valsts measure? That would boost the market cap dramatically. Latvia will become, will have a good chance of, ending up on the radar of, large hedge fund managers, from which, all of us will also benefit because, like my stock, APF stock, well, I can please myself looking at the high market capitalization and, applaud myself how wealthy I am on paper, but I'm a realist. I understand that this is pretty much a liquid stock, and most of the stock that is listed is pretty much illiquid. And the only chance to boost that liquidity is to do large listings of state-owned corporations. It's probably a matter for a different platform and different compositions to discuss why it's not happening. But I guess collectively it's our responsibility as market participants to continue to push for that to happen.
Yeah, you're right. That's a topic in itself to explore. But if we look at 12 companies currently listed on Nasdaq Riga, actually 6 of them can be considered as SMEs. Yeah, so and APF went IPO into 2023, raising more than 5 million. What were your considerations to go this route rather than bank financing, or as many companies do, they do bonds first before going to IPO? What were your considerations?
Yeah, it might, as you rightly put it, sound a bit unconventional that we went straight for equity raise, but it was pretty much the logic was the following. In the 5 years prior to IPO, we invested more than 15 million into the company. Almost half of that was own equity, own capital. The subsequent phase of investment program was even larger than what we have invested in previous 5 years. So it was pretty much a shareholder decision that I want to share the business risk, the credit risk, with somebody else. So hence the decision to go for an equity raise, which was intended to be supplemented with debt financing.
But even when you decide on equity raise, you can go sort of a private placement, find 1-2 investors, or go IPO. What?
Yeah, well, that is a more delicate question. A honest answer would be, if I go private placement or go to private equity, institutional investors, then I would end up, having more people at my table, lecturing me how to run my company. I did not want that. Because we clearly knew and we still know what we needed to do and how to do it. So what we needed was, a plain equity. We were not looking for smart money, as they tend to say. That's probably we might need at the later stage when we go big, do M&As and stuff. But at the given point in time, we simply needed cash to execute our investment ambitions.
Yeah, and you had very specific investment plans in place when going to the market. Do you think that's an important prerequisite or criteria to consider IPO and have it successful?
I think conventional wisdom would say yes. The more detailed, the more specific it is, it obviously helps, especially if you are targeting institutional investors and raising institutional money. And that level of preparation that we had, I would even argue that, looking at the issues before us, I'll probably say that, the breakdown for the use of proceeds, the one we demonstrated, and the readiness of the project, with all the construction permits already granted, was something was not seen before us. So that was good. Was it super helpful in our case? I would say most likely no, because the IPO ended up being purely retail IPO. So I think what people went for was an equity story, compelling story for a local agricultural producer, and associating yourself with something you consume on a daily basis. So to sum up, I would say that if you're targeting a retail investor, compelling equity story is more important. If you're targeting institutional, of course, then you need to be more institutionalized and have a more thorough paperwork in place in terms of how you're going to use your funds.
Yeah. Okay. So Baiba, correct me if I'm wrong. If I recall, then when you were going to the bond market, you didn't have a very specific sort of investment plan like APF or recently Latv's bond issue. Was that the case? And how, if anything, did this impact the raising of the funds?
Yes, that was the case. Actually, we are in the bond market since 2017, so we had already bonds, and one of the reasons why we issue again, because we needed to refinance. So as I mentioned in the beginning, our industry is very capital intense, so we need all the time renew our rental equipment fleet. And another reason was management buyout, when we needed to pay for previous owner their loan and some part of our shares holding. So actually, I don't believe that the lack of specific project was somehow negatively affecting our attracting the money. I think we went on the retail market with our story. So now we are already 17 years in the market. So we went with our strong sides, the digitalization, implementing technology. So we are just like constantly getting this financing with the funds, and we will continue with this. So I think market bought that, and it's clear. And at least for retail,
right? Yeah. And maybe what should happen with the company or market for you to consider IPO?
We are considering, and that was actually from the day one. We thought, okay, one day we definitely will be in a stock exchange with our shares. So that's definitely the one lifetime happening for the company, and you have to have right timing and right place. And the same problems what Jurijs mentioned, the liquidation and the size of the market. So if our equity, let's say it's 50 million, and we want to raise with acquisition up to 100 million. So biggest acquisition was last year, 30 million, and that's one big company. So of course, if we see at the risk side, the market potential side, the Stockholm is much bigger market, but let's see.
And in terms of sort of preparedness, do you have some specific criteria? Okay, when we reach that, then
it's the company size and equity size. Yeah, sales equity size, definitely. Of course, there's also like corporate culture and how we are doing things. So we also recently. In our team joined the independent supervisory board member. So and since day one we do our accounts according to IFRS, audited by Big Four. So I think we are quite well prepared. Of course, some boost up would be needed.
Right. So I think as we have evidenced, there is no lack of ambitions here represented. But apart from this lack of ambition for many entrepreneurs in the Baltics, do you think there are some specific factors that are holding back many other entrepreneurs to grow, to expand, to consider capital markets?
Well, if you would speak of capital markets, I think I can articulate to my own experience here. I think you're speaking of very basic human fear. I would even argue two types of fear. One is the fear of public failure. What if you fail? You are undersubscribed. You know what your competitors, partners, clients will think of you. And number two, I think, is the fear of complexity. Because once you become public, life is not the same. It's different, substantially different. And, you know, some entrepreneurs just, you know, don't want it for various reasons. And because it's obviously, you know, your working week looks different. You know, you have to interact with supervisory board, you have to interact with your shareholders, you know, you have to do different reporting. You know, it all adds up, you know, to consuming, you know, management time, resources. And some companies just, you know, or owners, founders decide that, well, I'm fine without it.
And now, sort of 1 year since, more than 1 year since IPO, are you still happy about that decision, going that route?
Well, I would still do it all over again. Probably I would do some things differently in terms of, you know, preparations, you know, preparatory roadshows, which in our case proved to be insufficient. But, you know, would I do it again? Yes, I would, because we have achieved what we went for. We did, you know, reach our target for the equity raise. And, you know, we do not exclude secondary offerings in the near future.
Right. So judging from my personal sort of investment portfolio, sort of European, US stocks are doing great, and everybody in my Baltic portfolio is underperforming, so to say, in terms of that. Your stock has sort of never reached the IPO price. When do you think is the right moment to judge whether that was a success, whether that's a good investment, and what needs to happen for investors in the Baltics to actually start investing? Because we know we have abnormal amounts of deposits earning extremely low amounts in the banks, yeah, and investment culture is not simply there.
Yeah, well, I'll start with your latest remark on you know, when is the sort of the test for us. I think realistically speaking, you know, we're completing investment program in May this year, which means that starting June, July this year, we'll be operating at the full capacity of, you know, whatever we have promised to our investors. Hence the forecasted 60+% increase in revenue that we forecast for this year. So I would say, you know, towards the end of this year, first quarter of next year, when we report results for 2025, you know, that's probably going to be a test for us. But then again, I would argue, my personal belief is that the capital markets in the Baltics are far from perfect, exactly to the very same point I made earlier, because of the lack of liquidity. And we are not, you know, an exemption here. We have other issues in the Baltics as well, you know, who are financially, operationally performing well, even paying quarterly dividends, and still for some academically unexplainable reasons, the stock continues to go down. Looking at my company, APF, you know, if I would look at the benchmarks elsewhere, you know, apply the EBITDA multiples, well, I would conclude that my company is undervalued now. So in my opinion, still again boils down to the questions of the lack of liquidity in the market.
Yeah. Yeah, that is.
You can see there is a certain vicious circle. So probably there would be retail investors ready to move from their safe term deposits towards stock market. But then again, they analyze the Baltic index and say, no. My deposit or even my bond portfolio is performing better. From the other side, to have that liquidity, there is also no silver bullet. We have to make a number of steps, and it's already discussed here. So we need large state enterprises, and then if as Jurijs said, those multiples in our markets are low, and then performance could be substantially big in probably a few years if we are able to kick in.
Yeah, I mean, in addition to individuals' holdings, the big deposits, we have also a lot of funds accumulated in pension funds, which also are not really used in investments in Latvia. About 8.5% of 7 billion invested annually stays in Latvia. So in a way, these things are quite connected. If there would be in the market more opportunities, good opportunities for pension funds to invest, they would also become an active players, hopefully.
Yeah, I have a point to make on this one because it's the pain is still right here. When we did our IPO, well, the good thing was I think 5 years prior to our IPO, we ended up being the first issuer into whose IPO 2 pension funds invested. Now, when we did the roadshow and we went pitching to big pension funds, especially in our beautiful capital city of Riga, some of those guys are the biggest money managers in this country. It was actually quite sad, to hear from a pension fund manager sitting on the huge pile of our money, concluding the meeting, said, well, you know what? I actually prefer investing just across the ocean. And it is very sad. Also for me, as a citizen of this country, as a taxpayer, personally, I don't want my pension money to support growth of some businesses across the ocean. I want it to be utilized for supporting companies in this region, in this country. So I think it's a two-sided stick in a way. Well, we as the issuers do our bit, but I think other market participants need to do their bit. And all these statements that, I would rather invest across the ocean is something I personally would not want to hear at all for the, people who are managing pension money. I would even argue that, our politicians, policymakers need to show some courage and, go with the statements. I know, make it a hard commitment, to invest 5-10% from the pension fund's money into, buying bonds, equities of the local issue. That will be tremendous boost, for the growth of the capital market.
Right. So Jurijs mentioned already about additional complexities becoming a public company. Baiba, in addition to sort of underwriting fees, the coupon payments, what kind of direct costs you have experience and how sizable they are just going to the debt market?
So our main bondholder is the retail, and actually 50% from the money comes from Estonia. So that was like really big surprise that being Latvian capital company, we managed to attract so much money from Estonia. I think the biggest success was that we started to tell about ourselves because we are 99% of our business is B2B. So actually retail does not know what we do. So we started to invest in public relation, tell about our business, and actually we combine like marketing with public relation. It turned to be very beneficial also for us. So actually we understood what we are, and our employees also oh yeah, we are working in a very great company. So when you have to open your doors and go outside and tell what we actually are, that's like we were lacking the knowledge how to do it. So okay, advisors say go to find some PR agency and start to make project. Okay, we went and they did something for us. Of course, next time we're smarter. We already thought, okay, we have to put actually our own ideas, not like PR agencies' ideas, what we are. So I would say that was quite big amount of expenses, yes.
All right. And last year there was also something that not is not seen every day. You approached your bondholders asking them to vote on increase of net debt EBIT covenant. Can you shed some light on this, what was happening, and maybe any advice to prospective bondholders to think about?
Yeah, the advice definitely be honest, to go out and speak and tell what happens in your company. So our investments came later, so the effect on the EBITDA was not enough good, and we saw that actually we can invest more because we saw the market potential. So actually we invested more than we expected to invest. That's why our net debt EBITDA increased, and we definitely saw that this is the way how we want to use this potential in the market. And what we did, we went out, we told what happened, why we doing this. We of course offered also like 1% extra because this risk a little bit increased for the positive voting. And definitely it helped that we organized electronic voting. So just person with smart ID or mobile ID can sign in and vote for that. That definitely helped. So to sum up, be honest, tell what happens, and tell your story, why you are doing this, and just communicate.
I mean, by now you're a seasoned presenter of your company. Do you think your example is encouraging others? Do you get questions from some potential prospective bond issuers about practicalities or something? Do you have that interest coming to you as well?
I really hope that our example is encouraging, but to be honest, I didn't have much like questions how to do it or what to do. So I totally agree with Jurijs that it's totally depends on the owners, and owners ambitious to be there, because it's not easy. Challenges comes, and you have to be open. You have to tell what's in your company. That's total different mindset, which we, I think, don't have in Latvia.
Right. And you said if you are sort of successful in finding big M&A, let's say in Scandinavia, then you might be going IPO Nasdaq Stockholm instead of Riga. Why so?
It's the size and the liquidity. It's the size and liquidity, definitely. So we have discussed with some advisors, if we would go with 50 million, so I'll say, you are crazy, your idea is crazy, totally, no, we are not there. So what you said, it's totally applies, that if we would more have this market in stock exchange, more companies, state companies and private, then this critical mass would grow and it might work. And we face the same problems with the pension funds. The same. We have very little institutional investors because they are very careful.
And certainly we can't expect those institutional investors coming from other regions if ours are very passive. So, Morten, so having heard answers to questions discussed today, what is your take? Do we need active capital markets? We need more SMEs or more active? We need these SMEs to become big companies? What's our best recipe for future?
I'm not sure whether there's more is needed or should be bigger and so on. What we have here is very heterogeneous group, right? Very interesting to be hearing about the issues here. Rather, I would like to address also this here with the financing, and perhaps this here very sort of passive and safe way of saving in this country. We kind of people in macro, we think about how much of this might be still related to the financial crisis, right? I mean, where people assumed enormous amounts of risk, and at that time perhaps not always knowing how much risk they were undertaking, and then, seriously many failing. And we have a lot of evidence often that people will be much more passive in terms of saving later on, and therefore you will simply just have problems making these offers, as you said, but you said it with a smile, right? But we have to go elsewhere, right? And I really like this one you also have, because you're absolutely right. the market obviously is very illiquid, and not so easy to do something about it like this year. So it's very understandable that people are going elsewhere. But development needed, yeah, I've been here 30 years and it's been slow, right? But I think also I will go for also what Jurijs said this about the fear. But some of it ends up being cultural. We also look at a country like Germany. Germany will be a little bit the same. People will be saving very safely and accepting 1%, 1.5%, something like this here, right? So it's a little bit in the culture also, quite frankly, even though it might sound strange, but culture is also part of the economy. In some countries, they're just more happy with risk than we are, right? So again, I think it sounds very, yeah, just a sec, right? Yeah, but yeah, you're ready to come up with something good. I have no doubt about that. I think it just has sounded very, very good, what I've been hearing, really very different businesses, right? But I will go away from this here. I know it's a very small sample, and to the students sitting there, we would never rely on a sample of 3, right? But it nevertheless sounds extremely encouraging, what I've heard, right? So I will be a happy person tonight. Thanks.
Right, just remark about Germany. I have some experience working in banking market there. And obviously, you're right. Germans like to work with their banks, with their savings, but then banks invested to stocks. So if Latvian banks would be those who are investing into Latvian stock, then situation would be much better. But probably wrapping up, I also believe that our issue is the size. And actually, Latvian businesses must think about how to get bigger. One thing is obviously to get kind of financing and to buy something, but then you can have mergers of equals, swap shares, etc., but to get the critical size. As soon you have at least 10, 20 million, then you can start actually. Then you are more efficient, more attractive for banks and markets. And this is what Estonians are doing and what Lithuanians are doing good. So think about growth. There is probably also organic growth perspectives. And if we are talking about double-digit growth when GDP is growing only 0 point something, it's still possible. Like we are doing, like many companies are doing, and that also solves that size part.
Yeah, we're going to turn to the audience with a tricky question. So, anything you want to add now, so they couldn't say I already told that or I already answered that. Anything you want to use opportunity? No. Okay, sure.
Yeah, what I would like to address also is this issue of what might hold these small and medium-sized enterprises back. Right? There was this big report, quite famous report, made in the autumn. Mario Draghi, from the former president of the European Central Bank, was in charge of this big report, some 400 pages or so, about what is wrong in the European Union. Why are we growing so slowly? Why are we way behind the Americans? What is lacking in terms of productivity? And therefore trying to address also, is there something there with regulation? Is there something with bureaucracy? Is there something wrong with legislation? Jurijs, you said a little bit about regulation there, this about these 3 years and you couldn't do anything, but otherwise we haven't heard so much about it. Again, it might be because it just works for you, right? But I'm dead certain that there are problems like that out here. And that could be interesting to look at, because that might be what is holding some back here in Latvia, but also in the other countries. But I have this feeling that we don't exactly know the picture of it, right? Certainly not us that operate outside. There will be a lot of individual stories about we need, less regulation here, we need less bureaucracy there, but I cannot know, and many colleagues of mine cannot know exactly what it is, but it's something that should be looked at. That could be very nice if somebody would research it, for instance.
Just maybe a quick follow-on on Morten's comment. I fully echo that. I don't have to go very far. In the few industries I operate in, agri, food, finance, No secret that Europe is over-regulated. No secret that when it comes to food safety, security, animal welfare, biosecurity, European Union is known as being the most regulated, having the most stringent requirements. Yet we allow third-party products to be imported into European Union. So I would just would like to echo what you said. The question of over-regulation is something that is hampering our growth, and it is holding us back. What I see also, from my inner circle, many friends and acquaintances that I have, quite a few very talented people, they go and do business in North America, Middle East, exactly, for these reasons as you alluded to, because over-regulation, and it's, relatively hard to do business here as opposed to some other regions.
I think as to the research questions, there's an audience who might be even hearing you and who are thinking about what should I research. Yeah, so let's see. But now we welcome any questions from audience. Are there any? That's a bit unusual, I would say. Yeah, over there. Yeah, maybe just wait for a microphone.
Hello, hello. Oh, hi there. Thank you for a very exciting and interesting discussion. Just a question from a layperson. It was mentioned that the for public state companies to enter capital markets is a precondition for development of the markets. Could you explain why is exactly so? Why can't the capital markets develop by only private companies entering in there, and what would be the benefits? And also I have a question regarding the political will for the IPOing of state capital companies. It seems like there's a commitment but nothing happening. Could you comment maybe, is this just a lack of political will, or there are some other obstacles for state capital and municipality capital companies to IPO in Latvian stock market? Thank you.
Yeah.
I'm fine to start. I'm sure my colleagues will have plenty to add. The first question of yours, well, I think there's pure mathematics behind it, because market cap, potential market cap of 3 companies sitting here is probably between 100, 200 million, I would assume. List Latvenergo, Latvia's vast measure, each of them will probably add a few billion euros each. So that's the answer to your question. It's a scale, and the time needed to reach this critical mass of market capitalization. Your second question was on why there is lots of talk, nothing happening. I'm thinking how to answer that diplomatically. Well, I'm sure there are some vested interests why people who are overseeing those particular companies are not willing to allow them to operate on market terms. So because bringing a company to the market, you say, if Latvenergo is listed, Latvian Forestry is listed, I would buy a large chunk of equity stakes. I would be coming to shareholder meetings and I would be asking tough, uncomfortable questions. So I think that's probably one of the reasons why there is lack of concrete actions to do so.
Exactly. My understanding is very similar to what Jurijs said, that technically it's not comfortable for those state enterprise management to be listed, and there is big fear of it. Right. And what was the second question?
Why not small, medium enterprises when they need to list large companies?
No, that was the first question. But second...
Yeah, I mean, I asked just about why it's not happening, and the first one is why exactly is the state capital companies are needed.
Right.
Is just the scale or attractiveness of the...
And the other thing is that in general public is against privatization. General public is somehow quite... they believe in state ownership. They believe that most of those state-owned companies are kind of crown jewels, and we must preserve them as a national treasure, right? And when politicians are discussing with the business, they do understand all those issues, why we need support stock market, why private business cannot develop fast enough without developed capital market. But when they come back to their party offices and look at their electors' opinion, they suddenly change their mind. And I would say it's a big issue. For instance, I was involved with telecoms, TET and LMT. It's a big issue. So general public don't want to be TET public. And for minister, for prime minister, it needs to have courage to explain the logic behind and do the transaction. And unfortunately, up to now, no one had it.
Yeah. Any over there? Yeah.
Oh,
Yes.
so it's working. I'm going to build a little bit on the topic that Morten already initiated about banking and loans. And as an ex-banker, I really haven't seen banks in this country sitting and discussing how they should lend less and earn less income. You know, on the opposite, they usually sit and think how they're going to lend more and issue more credit. So, I mean, since 2009, companies, their finances have gradually improved, and we also see the data that they have been gradually deleveraging. So I would say there are signs that this is a demand side kind of situation with the loans in the market. You know, we could argue also about the supply side. You know, each bank has their own risk appetite and so on and so forth. But my question here, is it really still 2008 lingering around, and that's why companies are reluctant to approach banks, or maybe there are some other factors out there why not banks, but the companies are deleveraging in the market?
Yeah, I guess I can start wearing my banker's hat. I'll ask with your last point on deleveraging. What we have seen in the portfolio of Industry Bank, well, quite a bit of deleveraging did happen when ECB raised the interest, because obviously, if all of a sudden you have to pay, 9% and you were paying 4% before, so companies who had some liquidity caution, they did basically shut the credit facilities. On your other question on the supply versus demand side. Well, again, I'm not in a position to speak for the whole industry, but what we can see in our bank, well, as I said before, the pipeline of what we can issue is actually several times more than we are in a position to do because of the size of the capital that the bank has. And I think the same is true for most locally owned banks. When it comes to large international banks, which do have the sufficient tier 1 capital to issue loans much more aggressively, then I guess you're right in a way that there must be some leftovers and perception of the risk and risk appetite, as a result of the 2008-2009 crisis, and that has also resulted in the quite a bit of decision-making authorities being taken back to the headquarters. And that's actually one of the reasons why the business of my bank is thriving, because one of the selling points that we have is time to yes or time to no, and well, actually experienced it firsthand with my poultry business. Just in parallel with IPO, we have been negotiating with I will not be giving names, but these are large internationally owned institutions. With each of them, we spent 6+ months. One of them went as far, to the local committee, to the Baltic committee. Both said yes, and then they went somewhere higher up. And the comment was basically, well, where is that? Aluksne? Where is it? 60% increase in production capacity, 3-hour drive from Riga. Are you serious? Of course we're not financing it. So, that's also, one of the answers to your question, that, the perception of risk has become different. And also the decision-making authority. I think why, what I see that the local capital banks are striving, what we have also seen in the last few years is a very significant boost in the growth of non-bank lending. And real sector companies are becoming more and more willing and ready to pay double-digit interest rates for the very simple reason they get the money in the first place and they get it relatively quickly, as opposed to spending months and months negotiating, playing ping pong, with large financial institutions with the probability of having yes or no quite uncertain. I didn't want to offend anybody, from the big banks, but that's the unfortunate reality.
I can comment that there is still sentiment from the crisis. I think it's on both sides, the entrepreneurs and banks as well. So I will use very bold expressions from my owner. So for some banks, I need to sign with the blood and pledge to my soul just to get financing for equipment. So we have like real equipment, real collateral. So we are not building some something not understandable. So that is definitely there. Yeah.
Probably to add with some examples. So I have also experience with one fairly large company who was willing to take like 10 million euro credit line, and the company's financials were good. Bank was happy to give such a credit line. But it ended up with 5 million. Why? Because that's the limit of local credit committee. And everyone understood that if it will go up, it will be just deleted.
Interesting example, yeah. Any other questions? Yeah, over there.
Yep. Kaspars Rumba from SME Council of Latvian Chamber of Commerce. I have an encouraging remark about our capital market, and maybe some of audience do not know that, for example, Swedbank offers trading in Baltic markets without any commissions, which is really exceptional. I don't think that there are many places in the world where you can trade without commissions. And about liquidity, I think that the lack of liquidity gives a lot of opportunities for value investors who look to buy cheap assets. And in Latvian or in Baltic capital market, you can still buy a lot of stocks below net asset value. So that's an opportunity. And as a question, I think that some of the IPOs like Virši and yours was also about loyalty of the customers. And the question is, can you see in the numbers any growth of sales and any this loyalty from your new investors?
Unlike Virši, we did not offer any loyalty program because we run the calculations and the economics of delivering fresh eggs to every shareholder. If you have few thousands of them, just are not there.
No. What I mean is that if I hold your shares, I buy your eggs instead of competitors.
Yeah. Well, we don't have the statistical evidence to prove that, but to answer your question, what was actually quite what we felt quite pleased about was that unlike the bond issues of Storent, where you had many or predominantly Estonians, ours actually was the opposite, and I think to that date it was on the other side of extreme, that IPOs that were done prior to us were dominated by Estonian investors, whereas our IPO of APF Holdings ended up having 92 or 93% raised from Latvia, which proves the point probably that, if you are in FCMG, fast movable consumer goods segment, you are a local producer, brand awareness is high, that generates an additional appetite from retail investors. I guess it also quite pleasing to the hearts of a few thousand of our shareholders, that they open their fridge every morning, they grab an egg and, hey, I own a piece of this poultry factory. That's probably cool.
Yeah, and we had one question over there.
Recently was announcement from a Nordic company named Sodra that 2% of Latvian forest land is for sale. So what is wrong with Latvian forests, and should anyone buy it, and should Latvian people organize some kind of company and buy this land or not? Its price is 500 million euros. It is kind of little price for 2% of territory of Latvia, and probably like 10 companies like yours would be the same of value.
So I think we
Maybe
don't
some
have a
comment on
forestry expert here, but
exactly.
But otherwise, any comments on this?
No, if that's the case, I like forestry, and actually in my banking business, we do finance quite a number of forestry businesses. So if you know that, if you happen to have the investment prospectus, send it over, I'll look at it.
I think this would be a question. So there is some political debate has started on this issue. So why Latvian pension funds are not investing in Latvian forests, for example? There would be probably quite many potential or pensioners who are already saving pensions who would actually be saying that's not just patriotic, but otherwise also a good investment. And I mean, as a state, we are not really prepared for an investment opportunity like this. So we'll see whether private players find a solution for this and what happens. But that's an interesting an example in itself, what could happen, and whether there are other things that can trigger popularity of capital markets as such. Okay, with this we will wrap up, and I have a couple of very brief questions to you, and expecting also very brief answers, 1-2 minutes. So SSE Riga celebrated 30 years last year, and since the very first year, one of specializations has been entrepreneurship. So at least 30 years, entrepreneurship has been also taught here. And my question is, so what do you see and hear about the younger generations? Are they more entrepreneurial, and so we have a hope for, as potential pensioners for this country?
Right, I think SSE Riga is doing great, because I know some companies where HR department seeing SSE Riga in CV just hire without interview, which is a kind of good sign. But obviously, the young generation is also looking not only to make business, but sometimes to enjoy the life, sometimes to fight against rich, sometimes to travel. So it will not be easy. And like in Germany, the transfer of the wealth from entrepreneurs to their children, it's always bumpy road. I think Latvia will experience the same issue. So I hope that the growth of economy and development of capital markets would encourage young people to participate. But current status, I would say, is not very encouraging.
Arvid, if I would answer your question, do I believe that the generation of now is more entrepreneurial than my generation, my answer is yes. On the flip side, what I see also, in the young generation talent that we are interviewing, recruiting, I think that the sense of realism or being realistic is something that I lack a bit in the pool of talent that we consider, and I also see that there is quite a bit of naivety, which is not necessarily a bad thing. You have to dream big. I need to have big aspirations, because if you don't dream big, you are unlikely to achieve anything. But that sense of naivety and lack of realism, and even more importantly, what I see in the pool of younger talent is, I think our generation was more ready to work very hard to achieve things. What I see, and this is probably a piece of advice for, if I may, for students who are about to graduate this year or in the years to come, is that from the perspective of employer, I see that there is lots of expectation from the young talents that they are already entitled to many things from day one they joined the company. But the perception of the employer is that you are entitled to many things once you prove yourself, once you show what you're capable of. And that's why you need to work very hard to make big things happen. But in any case, entrepreneurial ambition is there, and I'm very happy to see that it's much larger than the entrepreneurial spirit when I was 25 years younger.
So my personal opinion, that I think younger generation definitely is more smarter in terms of capital market and technologies. So that's benefit. But I also agree about this ambitious and sense of reality. So business environment in Latvia is not easy. So maybe they will grow and make this environment easier for themselves to realize their business idea. So let's see. There are opportunities.
That's a good wish as well, for that to happen. And Morten, you see students every year, so you see how they change in a way. What's your take?
I was about to hope that I could avoid this question, right? So I mostly agree with what was said, but so allow me to do it in the following way, right? When I came, it was way back in the 90s. Students ambitious, yes, very ambitious, more ambitious than now. And now I should be really careful, right? But possibly yes, but also be careful, because people were forced to be it at that time. Those were the days when this country was poor, and in order to succeed, you simply had to go through university, right? No matter what. There's more luxury now, and that means people can, if they fail here at the Stockholm School, it's not a disaster. It would have been so back in the 90s, right? So people have more options right now, and I think that's very nice. And it shouldn't be so stressful right now. Also shouldn't be too much travel, as I hear from you, and so on, right? Or, naive or whatever, right? But I'm, in that sense, I'm happy to see that it's not, live or let die anymore. Even though sometimes I can look back to the days when, hey, you could get students just to work super hard, as you said. But it's good that it's not that stressful anymore. That has changed. Also, I think, are you young people more entrepreneurial right now? I'm not the one to answer that. It's interesting that you say yes. I really don't know, but there are many more options right now. It doesn't have to be Big Four, right? And then the banks, and then something else. Now it's everywhere. So lucky you, right, young students.
Okay, with this uncertainty, what is going to happen in the world we live, I'd like to conclude this panel discussion. I found it myself very interesting. I hope our audience also found it interesting. So let's thank our panelists with an applause.